when you're buying a SPY. Also, it pays a dividend. You can see this little D at the bottom of the charts. You click on it, you can see the dividend information and the date that it's paid out. It pays a quarterly dividend, as most stocks should pay. That means that you're going to be getting paid 4 times a year, every 3 months, right? So again, you get the best companies, you get dividends, and if you switch over to day trading or you want to switch over to option trading, they have contracts that expire every single day. And so if you don't understand what I mean, once you get into options, you'll see how great the SPY really is, because again, every stock, they don't offer contracts that expire every day. You may get, let's say we looked at I don't know, Tesla. Tesla may have contracts that expire once a month. You look at the SPY, they have contracts that expire every day because it provides flexibility, right? So that means that if you're trying to, learn how to day trade on the SPY, and let's say you only want to put in, 50 to $100 per day trade, the SPY, you can do that because the contracts are so cheap and the contracts are, expiring every day and they're available every day. So that's for the future. But again, that's why I like this stock, is because of you can buy it and hold it, you can trade it, you can swing trade it, whatever you want to do, you can do on this one stock. Any questions so far? All right, I'll take silence as a thumbs up, and you can just give me an emoji thumbs up. I'll take one as a the voice for the group, moving forward. All right, cool. So this is the SPY. So let's add some indicators. This is just a naked chart. We don't have anything on it. If you're wondering what this is over here, this is just my watch list. You can add stocks to your watch list. You see most of these stocks are red. Again, Friday was a blowout, which is actually good, again, because you can buy the dip, and then once it recovers, you can take profit. So this is just a watch list. This area, it gives you information on the stock that you're looking at. So we're looking at the S&P 500. This is the full name of it, SPDR, S&P 500 ETF Trust. I'm not going to say that every time, so I'm going to refer to it by its symbol. Its symbol is SPY. This is the price. It is $599.94 as of Friday. The good thing about apps today is that if you're like, man, that is an expensive stock, it really does not matter, because all of these platforms allow fractional investing, and fractional shares, which means that if you say, hey, I only have $50, guess what? $50 is enough. You can buy a fraction of the SPY. You don't even have to worry about the full share. And then with the fraction that you have, the only thing that's going to happen is that, let's say the SPY it went down 1.7%, right? So if you put $50 into this and it recovers, let's say 5%, your $50 is going to go up 5%. So whatever the percent gain is on the total, that's what you're going to get on whatever you invest. So you don't have to worry about, hey, I need to put $600 into this to be able to trade it. Nope. You can put 40, 50, 10, 5. I wouldn't recommend 10 or $5, but I mean, if that's where you want to start, you could. And you're going to get the same percentage gain that the stock gives you. Again, if it goes up 10%, you get 10%. If it goes down 5%, yours is going to go down 5% as well, regardless of how much of it you own. So that's the cool part about fractional trading or investing. All right, let's slap some indicators on this. So when you're looking at this chart, we can see that it's going up, but we need to know, you always want to be out in front of the trade. You want to know you want to be able to predict what's going to happen next, right? If you can predict what's going to happen next, that's where the money is at, right? So we can see that it's been going up, and we need to add some indicators. So what you'll do on TradingView to add your indicators, they have this indicator square at the top. You just click on that, and then it brings up a list of indicators that you can add. So the first indicator we're going to add is the RSI. You just type RSI. That is the relative strength index. You can see I have it here. Click on it. Whoa. It added all of my indicators. All right. Let me take it off. Why did it add all of? Oh, I clicked it. I got it. Never mind. That's my fault. User error. All right. RSI is the first indicator you want to add. So the RSI is this indicator in purple. And on TradingView, it allows you to just focus in on one thing, so you're not being confused by these two different charts. So we're going to hide this one for now and just focus on the RSI. So we're going to do this. Now we can only see the RSI. If you're ever wondering what you're looking at, it is in the top left-hand corner. So the RSI stands for the relative strength index. This is one of the key indicators because when you're looking at the price of a stock, so if I said, hey, buy the SPY, right? I don't give you any context. I just say, hey, buy it as a good stock. You don't really know if this is a good price for it, right? You want to, the whole thing about trading is that you want to buy something at a fair price and sell it when it's at a bad price. And what I mean by that is that you want to buy something low, you want to buy something that's undervalued and sell it when it's overvalued or at value, right? So let's say if the SPY is actually worth 620, right? And you buy it when it's at 600 or 599. Now, when it goes back up to 620, you make profit. That's the name of the game, right? That's why they say buy low, sell high. That's why when the market is red like this is where you want to buy. You want to buy down, sell up, right? Buy red, sell green. A lot of people try to buy green, sell green, but most times you buy green and you end up selling red because you held too long or because it flipped around on you. So these indicators are going to help guide you on when to sell, when to buy, when to get in, when to get out, right? All right, so what is the RSI? What is it doing? It is telling you if a stock is overbought or oversold. So again, if you just look at the price, you don't know if it's overbought or oversold. You don't know a relative good value for the stock yet. The RSI is really easy to use. The only thing you have to do, I know you have this yellow, this is just the median, the average, but the only thing you have to do is focus on this purple number. And you just need to know, okay, what is the reading on this purple number? Because this chart is telling you if a stock is overbought or oversold. If a stock is oversold, this dark purple line that's going through the chart, it's going to be down in this area. 35 to 30 is oversold. That means that investors and traders have been selling it off too much. It's in a sell trend. They don't want it anymore. They're not interested in the stock at that time. So they're selling it off. And again, you don't have to read the chart. You can just look at this number. The number is at 46, 49 right now. If this number was between 30 and 35, that means that it is oversold. That means that it has been sold off too much. And this may be a good opportunity to buy and hold for a long time, right? Not, just a quick trade, but if it's down here, this is where you go long. This is where you buy, what is this, February? You buy in February and you sell in, I don't know, you sell in May, sell in June, right? If it's all the way down here. But that's oversold. Then at the top, around this dotted line, you have overbought. You have 65 to 70, which is overbought. If it is in the 65 to 70 range, that means that it has been bought up a lot. The stock, we call that being hot. It's been ramping up. It's been heating up. People have bought it up a lot. But then once it hits that 70 line, you can see around this dotted line, the stock should start to cool off. So you don't want to buy down here because it's been sold off a lot unless you want to hold the stock for a long time. You also don't want to buy up here because if you buy somewhere up here, eventually the stock is coming down, right? If the stock this is kind of where the stock is kind of maxing out. You can see back here, it actually broke that 70 line and went higher, but guess what? It came right back down. And then it went higher and came down. And then it went higher one more time, excuse me, and then came all the way down to 30. So my recommendation is when you're looking at this indicator, to make it easy for you, you want this number to be between 45 and 55, but you want this purple line pointing up. So is this number between 45 and 55 right now? Yes. Is the purple line pointing up? No. So it's between 45 and 55, but it's trending down. This means stay away from it. And the thing about it is that it's a good stock, but you don't have to buy it at that time. This is what a watch list is for. This is where you're like, okay, good stock, I'm going to buy it when the time is right. Timing is key when it comes to trading and investing. When did you get in, right? Not saying that this will never recover. This is just, okay, well, I can get in at a better price, right? Why buy in at $5.99 if I can buy in at $5.80, but it's also recovering, right? Like this is actually going down right now. So again, RSI, 45 to 55, purple line pointing up, green check mark. That's where you want to buy the stock at. When you buy in at 45 to 55 and this purple line is pointing up, that purple line is going to continue to climb. Once that purple line hits between 65 and 70, go ahead and take profit. So if you're watching this purple number, 45 to 55 on your entry, once it goes up 65, 70, that's where you take profit. Any questions? Any questions at all? All right, no questions. All right, so I think I'm doing good at explaining this. All right, that's indicator number one. Again, this is your RSI. It's going to tell you if it's hot or cold. Rainy? Go ahead. Did you raise your hand by mistake, Rainy? Or did you have a question? And you can unmute your mic. Maybe your mic is muted. Okay. There you go. Rainy, you can just write it in the chat as well. Thomas, go ahead. Nope. So that's where the other indicators are going to come in at. So the RSI, again, this is to give you, because you want your indicators to pretty much give you a sign that it's time to buy, right? This is just the first indicator that we're looking at. We're going to look at 3 indicators today, right? So this first indicator is telling you if the stock is in buy range, right? If the stock is between 45 and 55 pointing up, thumbs up, it is in buy range. That means that you don't, you technically you don't have to buy it just yet. We still want to look at our other indicators, but this is one check mark that we can say, hey, this stock is almost ready for, for purchase at this point. But it's going to be a few other things that we look at that's going to help us determine where to buy and where to sell. This is just telling us, okay, when we buy it, should it be going up or should it be going down? The worst thing you can do is buy something and immediately right after you buy it, it goes down, right? So this is going to help you with that. Does that answer your question, Thomas? Yes, that is correct. Nope. Nope. You don't even have to worry about the yellow line. If you want to, you can just take the take the yellow line off. It is it's a median. I mean, if you want me to, I could take it off. Right. Yeah, it's just the average one. So if you want to, you can take it off. You can do that to where you only see the purple number, so it's not confusing. But yeah, that purple number is going to be your guide. Does that help, Thomas? Yep. No problem. Rainy, what does RSI stand for? It stands for Relative Strength Index. Oh yeah, you weren't here for a second. Where's it at? So you go to your indicators, you type in RSI, boom, Relative Strength Index. So this is the RSI, and why the purple number is magic. So the purple number is a reading on if the stock is overbought or oversold. You do not want to buy something and immediately it goes down. So again, like I was just saying, you want this number to be between 45 and 55, but this purple line needs to be going up. 45 and 55 pointing down just means that it's going down through that same range, which means that this could continue down to 40, 30, so on and so forth. It could be heading downwards, right? You want something that has some upwards momentum, but you want to catch it right in the middle. If this area is cold and this area is hot, you want to buy it when it's warm. You don't want to buy it to where it's on fire already, because eventually it's going to need to be put out. It's going to need to cool off. You want to buy it right around this area so then you can take it up. Once it reaches this area, go ahead and take profit before it turns around on you. Does that help, Rainy? Rainy, if you're talking, I can't hear you for whatever reason. Oh, there you go. Say yes. All right, Amanda, what you got for me?
I was just wondering if this sort of RSI would also be on the Thinkorswim.
Yep.
Oh, it is? Okay.
They're pretty standard
So,
pretty standard indicator.
okay.
Yep, all of
Okay.
the indicators that I'm going to show you today should be everywhere.
Okay. Wonderful.
Yep,
Thank you.
no problem. All righty, that is the RSI. All right, so we got the RSI. Next thing we need to look at, let's add another indicator. We're going to add the MACD, the MAC. I call it the MACD. You can call it the MACD. That I think that's just a mouthful of letters. The actual name is the Moving Average Convergence Divergence. Crazy, sounds like time travel almost. Crazy name, but pretty simple indicator. So we're going to click that. Boom, we're going to add it to our chart. So it's right here at the bottom. And like I said, to keep this from being confusing, looking at all of this at one time, we're just going to hit this button right here to maximize the pane. Zoom in on the indicator. All right. So what does the MACD tell us? The MACD tells us if we're in a buy trend or a sell trend. That's what you want to know. So again, sometimes when you're looking at a stock, you can see that it's going up, but stocks change trends a lot. Like a stock will go from a buy trend to a sell trend, and you won't even know. You'll think, okay, this, because people believe that stocks always go up. That is not true. We had back in 2021, 2022, the stock market, the entire market was pretty much going down for a year straight. People kept buying the dip for a year straight, and it kept going down. For 12 months, it will pop up a little bit and then go lower, and then pop up a little bit and go even lower. It was going lower for an entire year. I can show you on the chart in a second, but the MACD would have told you, hey, we're still in the sell trend, or we're still in the buy trend, et cetera, et cetera. So it has saved you from losing money in that sense. Got a question in the chat. When I add the RSI, it always shows a separate graph under my candles. How do I get it to the graph? Jen, I'm not sure what you're referring to. It asks, are you using TradingView, Jen? You can just write it in the chat. I think I found the box. Perfect. All right, back to the MACD. Okay, so again, this is going to tell you if you're in a buy trend or sell trend. So the way that this works, again, simple indicator. It looks a little complex, but it is displaying the information in two different ways. So you got two lines. You got this orange or red line, however you want to, well, actually this is red, so that's orange. So we got an orange line and we have a blue line. The blue line is going to be representative of buying pressure. So the pressure to buy the stock. The orange line is going to be selling pressure, the pressure to sell the stock. And so when you have these two lines graphed, what you want to pay attention to is which line is on the top at the far right. So for a while, we had the blue line being on top of the red line for a while. So that means that we were in a buy trend. That means that the stock should have been going up because the buying pressure was being applied to the stock. When the buying pressure is applied to a stock, the stock is going to want to go up. Now, there's going to be times to where these two lines are going to change places. For instance, if we look back here at this part, we see that blue was dominant, and then it crossed over, and then orange became dominant. And guess what happened? When orange became dominant, because orange is representative of selling pressure, the pressure to sell, everything started to go down, right? And so now we just flipped over to the sell side. So the selling pressure just took over just a little bit. Just on Friday was the beginning of our sell trend, hence to why we had a bet. Hence, you can look at my watch list again. Hence to why we have all of this red happening, because now the market has flipped into a sell trend, right? It was in a buy trend for a while. We had blue on top. Everything was fine, but nothing goes up forever, right? So when you're in your trades, the way that you want to use the MACD is that if I'm in a trade and the blue is on top of the red, I'm good. But as soon as that blue crosses that red and they flip flop, they change places, that means we're now in a sell trend. I need to sell my stock and take profit, right? So this is one indicator that you can use to take profit, is that, okay, I need to take profit before this crosses over to the downside, because once it crosses over to the downside, the sellers are in power, right? We're going into a sell trend now, and we don't know how long that sell trend is going to last. So again, really simple: blue line, orange line. Whichever line is on top, that's the trend that we're going to be in. Now, if you're like, well, looking at these lines is a little confusing. It's kind of hard to, keep my eye on it. Fine. We have a graph. So on this graph, it tells you again, it's the second way of displaying the same information. So if you have green, if you have green on the graph, that's telling you that you are in a buying trend. That means that the buying pressure is being applied to the stock, and the stock is going to want to go up. That's why it's green. Now, when it's red, that means you're in a selling trend. Selling pressure is being applied to the stock, and the stock is going to want to sell off. You can see on Friday, we look at the line, we just crossed over to red. Red just became dominant. So red is about to be on top of blue. Guess what we got on the chart? One red square. This is representative of Friday. So Friday, we just flipped over to the sell side, which means that the stock should be cooling off and the stock should be moving down. Why? Well, I mean, the stock was up for a while, right? It crossed over here. Blue was dominant. Blue had been dominant for a while. Run. And then eventually, like I said, nothing goes up forever. Red became dominant, crossed over. Friday or yesterday, we had a pullback, and it is showing on our chart. Let's see, question. It's not clear. What do you mean blue or orange is dominant? Can you elaborate? What I mean by dominant, Rainy, is that whichever line is on top. Again, extremely simple. So if this blue line was dominant because it was on top of the red line, you're also going to have periods to where, I said the red line, the orange line. You're going to have periods to where the orange line is going to become dominant as well. And you can see that the orange line, if you look back here, the orange line is now on top of the blue line. So for a period, you have blue on top of orange. And then if you want to know if we were in the uptrend, yep. So for this same period that blue is on top of orange, the graph shows green. Green always means buy, right? Green on the graph, blue on top of red. Guess what? When blue crosses underneath that orange line, look what happens to the graph. It goes red, right? Goes red. And then when blue becomes dominant again, blue crosses orange, what happens to the graph? It goes green. You got me? Yep. Good. All right. Randy says she's good. Think of sky blue is up, red is clear. Yep. Good. Good way to think about it, Jen. So again, this is an indicator that tells you is pretty much going to tell you what type of trend you're going into, right? So people who are looking at the SPY, like I said, I'm telling you, the SPY is a great stock, one of the best stocks on the market, in my opinion. But you want to get a good stock at a bad time. So we just started this downtrend. So now may not be the time. We want to let it flesh out a little bit. But once it goes down some more, buy in, wait, sell when it goes up. Easy peasy. But again, the MACD looks complex, but it's just two ways of displaying the same information. You got the lines. If you don't want to rely on the lines, you can use the chart. And another trick to this chart is that if it is dark in color, so you got this dark green happening, that means that the trend that is in is going to increase in intensity, right? So this dark green means that the uptrend is going to be increasing. This light green means that it's starting to get weaker. That's why the bars are getting shorter. And eventually, it's going to flip to the sell side. That is also true for the red. You can see that the red is dark red, right? Strong dark red is increasing. Once you hit that pink or light red, it starts to get weaker. And then you got a little, it's flopping back and forth for a second, but eventually that the lighter bars are going to win out, and then we flip to the upside, right? And it happens every time. Look at this area. We got dark green, light green is getting weaker. And then we just gave up to the sell side. We gave up to the sell side with strength. The sell side got weaker. And then, the sell side was strong. Then it got weaker on the light colors. Weaker, flip to the buy side. So it's just pretty much an oscillation that's happening back and forth. But this is another way that you can see, okay, are we in a buy trend or are we in a sell trend? Again, the worst thing that can happen is you buy something and you lose money immediately. Jen, I always hold too long. Do you sell as soon as you see get 2 bars? As soon as you get 2 bars down. Yeah, so one mechanism to sell is you want to sell before this crosses over, right? Before you flip to the sell side, if you're in, let's say if you wait for this to happen, right? Let's say as soon as you caught the stock right before it flipped to the buy side. So you bought in right after this, right? You bought in, you're just riding the wave. It's going up, 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 up. You're good. You're chilling. You're making money. You're making money. And then you start to see a nosedive happening to where, okay, it's getting close. That red could be taking over. I'm sorry, the orange could be taking over the blue. Let me go ahead and get out. So you want to get out before Friday happens, right? This is Friday. You want to get out before it happens. Because once this happens, now you're in the process of a pullback, and who knows how low the pullback will go.
Can I just ask a question to clarify that?
Sure.
Do you see right before then the blue line is touching the orange line, like a day before? Yeah. So how come you didn't sell there and you would have waited for the next one? Is
Good
it
point.
because there's no red bar on the bottom?
Good point. Nope. So you can sell here because honestly, this is too close for comfort, in my opinion. This could have been a crossover, but our other indicators. So this is where your other indicators come into play. Not so you won't rely 100% on one indicator. Remember, we just looked at the RSI to tell us, a certain type of information. The MACD is telling us a certain type of information, and the other indicators that we're about to look at after this also will give us information on why this happened. Right?
Okay, right, thank you.
Yep. No problem. Good question, though. Good observation. All right, let me check the chat. All right, no questions. Cool. All right, that is the MACD. You'll get better with using these in practice. If this is your first time looking at it, do not be afraid. Again, when it was my first time, I had a big question mark as well, but I stuck with it, and it helped me actually break through and start to make profits with these indicators. That's why I still use them to this day. All right, next indicator. The stock RSI or stochastics RSI. Click on it. It's going to be added to our chart. This is the last indicator that we're going to add. There are some other indicators, but those are a little bit more advanced. They're good for option trading. You don't have to use them on charts, but we'll save that. We'll save that for next time, or for anyone that joins the Discord, we can talk about it there. All right.
Excuse me, Darius. I have a question real fast before you start again. Can
Sure.
you go back to, because I want to see what happened when you clicked on the other indicator. Like, it's a lot going on in this chart right here, but I want to see like what appeared when you clicked on that other indicator. Thank you.
Okay, so this, you wanted me to click on this one, and what do you want me to do now?
No, so when you went over to the other indicator, this Stockit RSI,
Mhm.
what appeared? I missed what appeared on there.
Oh,
Yes, sir.
this
Thank you.
down here. So yeah, so you're gonna go to indicators up here. I got you. You're gonna type in stock. Yeah, I mean you can type in the full stochastics, but stock RSI. You're gonna click on it. And when you click on it, it's gonna add it to the bottom of my chart. So this is the MACD over here in this area. This is the bottom indicator. When I click on this, the stock RSI is right here. So if you're ever wondering what you're looking at, top left-hand corner, top left-hand corner, top left-hand corner, top left-hand corner is going to tell you. Does that answer your question, Kim?
Yes, it does. Thank you.
Perfect. All right. And then I just maximize the pane. Again, you got this little cube or square, whatever you want to call it, over the indicator to just focus in on it. All right, so this indicator is the stock RSI. And again, you don't have to use all of these indicators if you don't want to. There are thousands of indicators, but these indicators I found, they all talk to each other. You don't want to have indicators that are doing double duty, like two indicators that are giving you the same information. And then you also don't want to have two indicators that are giving you conflicting information, right? Because information is information from your indicators is what's going to help you make a sound trade. But if you have two giving you the same thing or two not agreeing, that's where you kind of get stuck. Amanda?
So on Thinkorswim, they don't have the stochastic SRI. They have a stochastic crossover or just the stochastic. Do you know if it's the same thing essentially as the one that you're on?
Yeah, I think it may be the stochastic crossover. I haven't looked at Thinkorswim in like 2 years.
Okay.
Yeah, I think it's the stochastic crossover. I don't think it's the stochastic by itself because that indicator is tuned a little different. It may be the crossover, I want to say, if you don't have stochastic RSI.
Okay.
And what I can do, again, we do have the free Discord. If you join the free Discord, what you can do is just send me a screenshot of what it looks like. And I mean, as soon as I look at it, I can tell you based
Okay.
on what it looks like, how
Yeah.
it functions.
That would be wonderful. You're gonna put that in the chat after, right?
I'll
There's-
put it in the chat right now. Let me
Okay.
take a pause right now while we're talking about it before I forget, because that is possible. Let me put it in the chat here. All right. Where is that link? Boom. All right. This is the link to the free Discord. Again, we do have a paid version, but it is right there in the chat. So if you click that link, it's going to take you to our Discord, the Blank Check group. We have multiple events. I think we got about 6 events going now. We got 6 different events. Also, for the people that are in, if you're in Atlanta, Georgia, I do teach stocks in person. I'm actually going to be teaching in person tomorrow. I have a series that I'm teaching in, I want to say it's Edgewood. We have a venue space there. So if you're interested in being taught in person or coming to one of my events to actually learn on like a whiteboard and things like that, let me know. I can give you the information to that, and then we can move on from there. Willie, go ahead.
Yes, I was wondering, like the RSI has certain parameters for buy or sell.
Mhm.
Does the MACD have certain parameters that we should
Yep.
look for?
Yep. Well, not number wise. I don't have any parameters number wise. I mean, you can make some, but normally when I'm looking at the MACD, what I want to avoid is a MACD crossover to the downside, right? And the MACD crossover is pretty much when the 2 trend lines change. They swap places. So blue goes to being underneath orange. I like it when orange, honestly, I honestly like when we have a red trend. We have, red, orange on top, and then blue is just about to cross over. This is what I
Yes.
like, because this is the beginning of the uptrend. So I like to get in around, either a little bit after or before this uptrend starts, and then I like to just ride the wave up, and then right before it crosses over, I need to be getting out.
Okay. And would you look like at the history of it to see if once the blue crosses over, whether it would just bounce off the orange?
Yeah, and so when you're looking at your other indicators are going to be key in figuring out if it's going to bounce. So
Okay.
like the indicator that we're looking at now, which is the RSI, you could look at what I'm going to show us after this. So after we look at the stock RSI, and the stock RSI actually could help us find these bounce points, right? Because sometimes we have a little bit left in the tank to push us up to where we're not going into a downtrend, right? But it's not going to show on this chart. Again, you don't want to get in the habit of depending solely on one indicator. They all are giving you, like I like to call it, one side of the square. If it's 4 sides to a square, you need all sides to make it a square, right?
Yes. Okay.
So you want to take in all of that information and then say, oh, okay, this is going up or this is going down, and then make your decision there.
Okay.
Does that help, Willie?
A whole lot.
Perfect. That's what we're here for. All right. Kim, you said you're in ATL. Perfect. And in person would be awesome for me. Thank you. Great. All right. Kim, I'll get with you. Kim, once I'm done with this, you just hang on after everyone leaves, and then I can work with you to get that information and give you a little bit more information about what it is and how it works and et cetera, et cetera. Cool. I see the thumbs up. All right, let's keep rocking. Next thing, stochastic RSI. All right, so what is this? And also see that Jen said that She didn't know that there was more than one RSI. It is. There's a lot of different kinds of, again, there's thousands of indicators, but you don't need them all. You just need to find the ones that give you the information you need and then make your decision. All right, so this stock RSI, it has boundaries just like a normal RSI. Remember, the normal RSI was 30 at the bottom, 70 at the top, and I like being 45 to 55 pointing up. This one is a bit of a wild child. This this one moves extremely fast, but it's actually good. So this stochastic RSI is a momentum indicator. So this one is going to tell you, hey, if it moves to the upside, how much gas do you have in the tank, right? If it moves to the downside, how much gas or momentum do we have in the tank? So is it going to go up at a sharp angle? Is it going to go up fast, or is it going to go down fast, right? So that's what the stochastic RSI is telling us. It's telling us momentum, because honestly, you want to get into a trade, and as soon as you get in, you want it to go ahead and go where it's going to go, right? If I get in, let's say, the SPY is at, we'll round it up to 600. If I buy in at 600, I immediately 2 seconds later want it to go to 620, 630, 640. I want it to be moving that fast, right? I don't want to wait. So the stochastic RSI, again, this is a momentum indicator. If you have a lot of upwards momentum, that's going to tell you how fast you're moving up. If you have a lot of downwards momentum, that's going to tell you how fast it is moving down. So what is the readings on it, right? So you have 20 at the bottom, 80 at the top. So with this one ranges like, this actually can go to 0 and to 100. So the easiest way to read this one is that just think about this one as a coiled spring. So anytime you jump into a stock, you want this stochastics to actually be low, because when you're thinking about momentum from a spring, let's say you have a spring, or when I was a kid, we used to play with slinkies. I don't know if anyone played with slinkies before, but it's basically a giant coiled spring. You press it down, you can press it together, and then once you move your hand out the way, it extends and stretches out, right? So that's the same way that this works. So what you want is when the stochastics is low, because you want, once it's low, you have a lot of momentum to the upside, right? It can stretch itself out and move all the way up to the upside. And then the opposite is true. Once it's extended as much as it can go, guess what's going to happen? It's going to contract, right? And so that's what just happened to the S&P 500. So again, you have 0 at the bottom, you have 100 at the top. The top, so it expanded, boom, it hit the top, and then Friday, it decided to start to, well, actually, this is Wednesday, it started to slow down and move downwards, and then Friday, it just, again, pulled itself to the downside, because when you're all the way at 100, all of the momentum is to the downside. So if you're ever looking at a stock and you look at the stochastics and it's up against 100, stay away, because every time it hits 100, what happens? It pulls back. Hit 100, pulls back. 100, pull. I can scrunch the chart up. All of this at the top is 100. You get my drift. So what you want on this one, again, this one is really simple. It's simple, just like the normal RSI. You want this one down here. You want it between 0 and 20, crossing that line. And really, once you get, I know today we went over a lot of things, but once you just look at it, like you'll get to the, like now I can do this. Let me reset the chart. I can look at this and say, okay, it's going down. Just with an eye test, right? Without zooming in on the indicators. So eventually you're going to get to that point. You just have to get familiar with them, because they're pretty simple once you get, what's going on. Again, these indicators are only telling you one or two things. They're either telling you that it's going up, or they're telling you that it's going down. That's the only thing that can happen, right? But again, back to the stochastics, what you want is, if you want to trade a stock that is moving up, you want it to cross this 20 line to the upside. So moving past 20 upwards. And the danger zone is 100. Do not buy at 100. If you buy something in the stochastics at 100, guess what's going to happen? It is going to have more momentum to the downside, because all of the momentum to the upside is gone, and it's going to tank on you, right? Momentum to the upside is at 100. It's maxed out. It can't go any higher. It's going to pull back. And if you're ever wondering, can it go higher than 100? It cannot. If I scrunch the chart up, 100 is the top. You can see how many times it hit 100 and comes down. 100 down, 100 down, etc. And so once you catch it from the bottom and it's moving to the upside, I can actually replay the chart. Let me see something. Use a little bit of tech here. Where do I want to put this bar? Put the bar here. All right. So I just went back in the past on the chart, and I'm going to show you why you want to catch it at 20, because once it breaks this 20 line, it's going to want to move back up. So after it breaks 20, it's going to hit 50, and then 80, and then 100. So these different hash marks, 50, 80, 100, really, I'll just use them as points to check my other indicators. So if I see that this is at 8 at the time, it crosses 20 to the upside, perfect, thumbs up, time to get in. And then once it reaches 50, I'm going to check my other indicators. Where are we? What does my RSI look like? What does my MACD look like? What does my candles look like, right? And then if I'm good to go, cool, I'll let it ride. It goes up to 80, same thing. Check my indicators. All right, RSI, MACD, candles, where are we looking? What are we looking like? We're still good to take it up to 100. Honestly, I wouldn't even let it hit 100. I would get out at 95. If you know that it can tap 100 one time and turn around, I wouldn't even risk it. 95 and I'm out, right? So let me go ahead and play this. I think 3 times speed is too fast. Let me do 1 time speed. So we hit play. Oh, it's all right. So you can see how it built its way up. It crossed 20, went up to 50. Again, this is where you're going to look left, right. I need to check my indicators. Let me make sure I'm still good. Let me make sure I'm not oversold. Let me make sure I'm not overbought. Let me make sure my MACD is not crossed over to the downside. Hit play again, it goes up, hits 100, and then once it hits 100, again, it hits 100, start to come down. And once it starts to come down, you shouldn't even be in a trade anymore, honestly. But this is what happened on Friday. People were still buying the stock thinking that it was going up. They don't use the stochastic RSI, because if you look at the stochastic RSI and it's at 100, the stock is coming down. That's your signal to just stay out the way for a second. Hit play. It continues to just drop off the top and continues to go down. So that's how the stochastics works. Again, it's going to take some time for you. If this is your first time setting eyes on these indicators, you may not get it on your first time, especially if you've never looked at any of this stuff before. But I say these 3 indicators, if you stick with it, is definitely going to help you. And you can take the trades as slow as you want. So just remember the same parameters. Remember to check in at the right times, and then you should be good at taking it from one level to the next. So when we look at the fake out, let me clear this out. Do you want to exit? Yeah, we can stop the replay. All right. So when we look at the fake out, right? This was a question that a lot of you had. So on Wednesday, February 12th, we can see the date down here at the bottom of the chart. Why didn't this cross over? Why did we get faked out? We thought it was going to cross over, but it didn't. Well, this is February 12th, right? If we look at these stochastics, where are the stochastics at? The stochastics is down at 31, right? This is the 12th of February. The stochastic is right here. Look at how much space we have to go all the way up to 100. We had a lot of momentum to the upside, and guess what happened? It continued to push itself to the upside. Now, if on that same day we looked at the stochastics and it was around 95 to 100, then of course we would have had that MACD crossover to the downside instead of a fake out. But we still had more fuel left in our tank, and so that's why we didn't cross over, because we still had more gas left to move to the upside. So it decided to do that. And then when we actually got the crossover, when we started to move in a downtrend around the 18th of February, going into the 20th. So this is the 18th of February. Look at where we are. We're at 100, right? It's already maxed out. 18th, 19th of February, we're maxed out. So we're in the back pedal at this point. We're sliding down, and then boom, you get to Friday, right, to where we are with the massive pullback. So again, these indicators, like I said, you join the Discord, we'll be talking more about this. We do have, again, a whole bunch of different types of events. So, attend the ones that you can. And then again, we do have a rolling chat. So if you have any questions about anything, you can just write in the chat, and then myself or a person from my team would just hop in and answer the question for you. So any last questions? Let me see, Jen. So does that mean you never put in limit orders and always do market? I'll put it in the limit order if it's required, but for the most part, if I'm doing this type of trading, I'm not talking about any other style of trading that I do, but for this type of trading, like buying low, selling high, I will go with market. Now, if I'm doing options, I'm going with limit. But I think market order is fine, especially if you're buying something on a low and your indicators are all good. I think that a market order is fine. All right. It looks like we're a little bit over time. I do apologize. I know it's Saturday and we have things to do. Anyone has any additional questions before I close us out here? And again, the link to the Discord is there. I recommend joining. Again, we have a decent community of people who all want to learn. We have some beginners and we have some advanced people, but we haven't had any I'm knocking on wood right now, but we haven't had any weird occurrences. Like everyone's cool, everyone is chill, and everyone is there to learn and make money. So fun people. Let's see.